And we're moving straight to our conversation for today, which of course centers on the agenda of the new Central Bank Governor, Mr. Godwin Emefiele. But this time, we will be looking at it from the angle of the organized private sector under the umbrella of the Lagos Chamber of Commerce and Industry. In fact, actually, the Chamber recently brought out a release asking the Mr. Godwin Emefiele to come up with a guideline on how to implement his new policy. That's another one. I mean, bring out your agenda, and of course we need to know how the implementation is going to go. Well, I have here with me the Director General of the Lagos Chamber of Commerce and Industry, Mr. Muda Yusuf. Good morning, Mr. Yusuf. Good to have you.
Good morning. It's a pleasure to be here.
It's usually difficult to pull you out.
Yes.
Well, it's good to have you this morning on the show. Well, the organized private sector of which you represent has always called for a gradual reduction on interest rate. Well, we heard the CBN governor talk about, or rather, you've always clamored for a reduction on interest rate. And we heard the CBN governor say that he's going to do a gradual reduction of interest rate. Does that meet your expectation?
Well, we are generally excited by that pronouncement, because interest rate has been a big issue for the business community across all levels, large, medium, and small. So it's a good thing that he has promised that. And generally, we welcome his agenda. There are quite a number of components. The gradual reduction in interest rates is one of it. The financial system stability is another. The improvement in payment system is another. Then also, more importantly, is the focus, very robust, mention about active role of CBN in economic development. That is in the area of development finance. All these things I think are very good, because unless you have an active role of the CBN in the development space, it is not likely that you can make the kind of progress that we expect to make in this economy. So coming back to the issue of interest rates, we are very happy about it, and we hope that the guidelines will come out early enough for us to know how he intends to achieve it.
Well, we saw that after that press conference he had, we saw the financial markets reacting to it. We saw the Naira depreciating 2 months low. We saw the bond market. There was a sell-off in the bond market. However, he still came up to say that he talked about reducing a gradual reduction in interest rate. That does not mean it's going to take effect immediately. In fact, he is looking at having the interest rate reduced after the election.
Well, that for me will be something like an anticlimax, because initially one was excited about it.
But that statement, did it come to you as a surprise?
Yes, it came to me as a surprise.
Were you expecting that he was going to reduce the interest rates immediately, considering what we have here, the macroeconomic indices at hand now?
Well, he said gradual reduction. Gradual can start immediately. It can start effective from the next MPC meeting. We are not expecting a sharp reduction that will, that could trigger any serious shock in the economy. But one must say that we need to be careful not to overemphasize the importance of these other variables. They are important. Exchange rate stability, concerns about portfolio investments, bond market, and so on. But if you talk to the entrepreneurs in this economy, apart from the issues of infrastructure that you cannot fix overnight, the issue of interest rate is one of their biggest headaches. And if you are at a point in an economy where we are worrying about creating jobs, where we are worrying about, inclusive economy, then the entrepreneurs we have to do something about this interest rate. I have a feeling that there is too much emphasis on these other variables to the detriment of the cost of credit to this economy. And that is why we seem to be having the kind of disconnect that we are having between our GDP performance, between the GDP growth, and the general performance of the economy, and the challenge of inclusiveness of the economy, and the challenge of unemployment in the economy. So it's something that we need to really ponder very, 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 very well about. Because if you don't have credit, how do you drive the economy?
Now, but would you rather have a low interest rate and then the exchange rate is something else?
Well, I wouldn't say the exchange rate would be something else. For instance, why should government be borrowing at double digits? Why should government be... All these foreign portfolio investors that you talk about, in their home country, they know what the interest rate is. Interest rate is 3%, 4%, 5%. There's a reason for that. Because how else can the indigenous players in this economy be part of this economy? We have been celebrating the economy as the largest. We have been celebrating the GDP growth. Yet, the entrepreneurs are not finding their proper place in this economy. So if there has to be a trade-off, so be it. Issue of interest rates is as important as the issue of exchange rate stability. It's as important as issue of inflation.